It was a massive collapse, as you know, and then obviously people that were placed into that, I suppose we know where they stand at this point in time. I think
it's zero super,
exactly
working
right.
hard. 42,000 new SMSFs set up last year, which is up from about 35,000 the year before. Why are people more and more serious about wanting to take control?
People wanting to have that control and not leave it to others.
Today I've got Madeline Morgan, heads up Your Money Advisor, which is our financial planning business. What are, I'd say, 2 or 3 of the big things that you look at in the first instance to go?
There's a few layers to this. There's not just one answer. You know, obviously balance, you need to have a decent balance. Might be 250,000, might be 500,000, might be $1 million.
Traditional solutions, I think, too, are really letting retirees down.
With a lot of traditional super funds, obviously there's a variety of different mixtures that they do invest in. I suppose with any sort of retail industry super fund, you're probably exposed to a certain mix of assets. Single assets probably stay away from.
Hey guys, welcome to this week's Money and Investing Show. This week we are blowing the lid off superannuation, specifically self-managed superannuation. I've got a guest in the studio with me today who is an absolute expert on this space that's going to help you get a game plan together for whether this is right for you, and if it is, what to do next. As always, don't just take notes, make sure you take plenty of action. Enjoy the show. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter. And a bit of a change up in lineup this week. Not my regular co-host, but instead, very, very special guest. Today I've got Madeline Morgan, heads up Your Money Advisor, which is our financial planning business. Great to see you here, Maddie.
Pleasure. Thank you for asking me to come on. I'm very happy to be here.
Always good to have a chat, right? I know you're one of those people that just loves to operate behind the scenes and get the job done. I mean, we've worked together now for 15, 16 years?
16 years, yeah. It's been a while.
Or 8 children between us, if you use that benchmark.
Yeah.
And it's been an interesting one. And I think, you know, your role in terms of heading up the financial advisory side of the business, and particularly self-managed super, is a huge one, because it's an area I think a lot of people grapple with and they've kind of heard of and want to know more about, but don't know where to go.
Yeah, absolutely. So, you know, we obviously are a full-fledged financial advisory service, but SMSFs are our specialty. And we do pride ourselves in the work that we do in this space. I think, you know, if someone were to come across and see what we can do and see how seamless it can be when you have the right people in your corner, I think that's what we take pride in, for sure.
That's the key thing. And I think, you know, without sort of putting the cards on the table, so to speak, part of the reason for you being head of that area, I think one of the strongest values you have, other than your technical prowess and qualification on that side of things, is that empathy with people, whereby, you know, we're in a SMSF, there's loads of abbreviations and acronyms, and it seems really complex and woody. I think your ability to cut through that and communicate it clearly is hugely important.
Yeah, I think this is a perfect match, you know, whether in a workplace or outside of the workplace. You know, the way that I conduct myself and the way that I look to ensuring that people have full comprehension of what is entailed in a very simplistic way. I think that's really important, giving people the power to understand and, you know, take control. That's
an interesting one, isn't it? Giving people the power, because it is your retirement ultimately. Absolutely. And it's one of those things I think, yeah, a lot of people shy away from, because it seems like it's an awful long way away when you're young, and then all of a sudden it can kind of creep up and you go, oh, shivers, it's literally around the corner.
Yeah, absolutely. So, you know, I think it's important to think about these things, you know, when you are younger and have the ability to, you know, perhaps be a little bit more spicy than not, and, you know, put those seeds in place for it to fruit later, for sure.
Okay. So self-managed super, been a massive growth area. I think 42,000 new SMSFs set up last year, which is up from about 35,000 the year before. $1 trillion in assets under management now. I mean, it's about a quarter of the marketplace in terms of super. Why do you think it's seen such a charge? Why are people more and more serious about wanting to take control?
Look, I think this day and age, there's a lot more information, 100% that's presented, you know, through social media platforms and whatnot as well. So, and people are becoming a bit more aware and in touch with what actually is going on. And I think, you know, I suppose you look at news headlines, you look at, you know, what other people are producing from superannuation funds, you know, potentially they don't have as much control. You know, all these things really do impact, I suppose, the reason for the growth, people wanting to have that control and not leave it to others to control it for them.
Well, it's an interesting one, isn't it? I mean, the question I always like to ask, I've asked this so many times at different live events around the world, and I guess the question is, who do you trust most with your money? And it has to be yourself.
Absolutely.
But people are sort of like, but I don't know what to do, or I don't feel I can shoulder all of that responsibility just yet on my own, which I guess is where you and your team kind of kick in. And the traditional industries, or the traditional solutions, I think too, are really letting retirees down. Any thoughts on that?
Yeah, look, with a lot of traditional super funds, obviously there's a variety of different mixtures that they do invest in, and I suppose with any sort of retail and industry super fund, you're probably exposed to a certain mix of assets, versus say an SMSF where you can, I suppose, be more in direct line to the actual investment.
Gotcha.
I think that's quite a key difference. Obviously, yeah.
Let's break that up. So I saw some research from one of the professional bodies that we're members of that showed that self-managed super funds yet again this year outperformed APRA-regulated funds. I think some research came out of the University of Adelaide from memory. So industry funds, look, they've run into their problem. They're the default for many people. And look, don't get me wrong, it's better than nothing. But some of the headwinds I think that people have now is a lack of trust. And I'll give you 2 or 3 examples of this just from the sort of stuff on my radar. And I know it's much deeper on yours because, this is really your lane. So performance is one, where industry super has grown to the stage where it's so massive, trying to generate additional value add becomes harder and harder. You're kind of trying to traverse an oil tanker through some markets. Secondly, I guess is some of the reputation stuff. We saw hacking earlier in the year where people had their balances reefed out. The level of service, a really slow and tardy payment for death benefits when people pass away. And then the scandals around various unions. I think CFMEU is one that's sort of front and center with one of the supers where, there are backhanders and millions of dollars paid for, legal fees for members. The whole thing is a bit on the nose.
Oh, yeah, absolutely. So, it's hard because, I suppose, if you are a young person, you get into the workforce, these funds are your default funds, and which is fine to.
And it's easy, right? Yeah, it's just set up and it's good.
You don't have to think about it, just kind of ticking along in the background until you need to know about it. Like with some of that information that's, the news of some collapses and whatnot. So, I suppose, that's where there is a true difference in an SMSF specifically, although you can get exposure to those same managed funds, but I suppose having someone in your corner that prompts you to see the correct line of sight.
That speaks plain English too, I think is pretty important.
Exactly.
Just on that in terms of investment mix, now I did a deep dive on this last year and I actually I won't tell you where, but I managed to get a live copy of the portfolio for a pretty large industry super. And that fund had more money invested in Ansell, which is the medical devices, rubber gloves, condoms business. That makes under $100 million a year in profit. It had more money invested in Ansell than it did in Apple, which is one of the world's biggest, most profitable companies, and that skew toward we invest in the domestic market, and this isn't about being unpatriotic. It's about putting your money where it can work.
Absolutely.
And you look globally that the action that's been had is largely in the US and especially in the tech sector, which most super funds would be underweight and they wouldn't have a lot of exposure to, as evidenced by the actual portfolio of holdings that I saw. Whereas self-managed super clients might go, well, that's the hot spot right now. So if I'm serious about wanting to get some outperformance, that's where I need to invest. So you have all the control to be able to do that.
Yeah. Yeah.
The other thing you just mentioned was about collapses, and I guess reputation and fear are 2 things that really hit investors as a red stop sign. So First Guardian, we couldn't have a conversation around super without discussing the dog's breakfast that is. And I really feel for investors that were packaged and processed literally into that pathway. And so for the benefit of everyone, so First Guardian was a trustee company, right?
Yeah, correct.
So you go see a financial planner, they say, right, we're going to roll over, we'll get you set up with a super, and we're going to put it with this company, and then they're going to do the investing for you in terms of whatever they choose to do in this very opaque box.
Yeah.
which turned out to be, well, let's call it what it is, somewhat skullduggerous. There's billions, there's over $1 billion missing of investor funds right now.
Yeah, absolutely. It was a massive collapse, as you know. And then obviously people that were placed into that, I suppose, we know where they stand at this point in time. I think
zero super after working hard.
Exactly right. And at recommendation to that fact, yeah.
So when people sort of talk about SMSF and everything around that, I think here's the clear distinction. With SMSF, you are the trustee, as in the investor. So you are in total control of your own money. We mentioned earlier, who do you trust most with your cash? It has to be yourself. So there's no third-party trustee coming in that's got the ability to milk or siphon funds away. You've got total line of sight over the assets. You've got total control as to where those assets invest. It's an interesting one when you sort of do a bit of search about setting up a super. So what are some of the requirements if you have someone that presents to you, and I know you do fact finds and check suitability, what are a couple of the, and we'll give people a pathway to look at that if that's what they're interested in. What are, say, 2 or 3 of the big things that you look at in the first instance to go, yeah, maybe SMSF is something you should consider? What would they be?
Absolutely. So, I think there's a few layers to this. There's not just one answer. Obviously balance, you need to have a decent balance. I think if you talk to any advisor, everyone's going to have an opinion. It might be 250,000, might be 500,000, might be $1 million. But I think that tied in with the overall objective, like why do you want control?
That's
do you
interesting.
want flexibility? So I think when we look at it, we look at a range of different reasons why. So, if someone's very young and there's potential to add more to super later on, that might be a really good consideration for this person. If they want more control over their investments versus what is available on the market at the moment. So I think it's multifaceted. There's not one answer.
I like the why question because, you see people, they go along to a property seminar, for example, and say, right, let's get you set up with an SMSF so you can buy an investment property, which isn't necessarily the best thing. I mean, number one, it's quite likely to be a single asset in their super, which is quite risky. And I guess second to that is quite often those properties don't service themselves. And so you're in a position where the fund has got a shortfall to service the property and you're hoping it goes up in value. So that's not going to a property center, setting up an SMSF to buy a property is probably not the cleanest pathway to go in.
No, single assets probably we would stay away from. You're better off having, the way that I look at it, a pizza. You want to have a few different slices, have different variety of different exposures in order to, balance and, not have it all exposed to one asset, as you've mentioned. So
I like the idea of pizza too. I'm feeling a bit peckish on the back of that. So this is your communication style. People can relate to that because it's not one slab. It's like have a slice of this, have a slice of that. So it's giving you a broader perspective. I guess the other thing on there is that, okay, so if you're going to do a fact find out whether it's suitable, where your financial standing might be, and assuming you've got, the required balance is tricky, isn't it? As you mentioned, if someone's younger and they've got 10, 20, 30 years more contributions they can make to it, they can start with a thinner balance. Maybe 250 is probably a number that we see touted around, plus the ability to earn more in. Second thing, you've got to want to have a strong reason why. I want to have control over my retirement. What are the big tasks? A lot of people, it's going to be so hard. I mean, I manage my own super and there's not much work involved, to be quite frank. I mean, my investment strategy runs itself and I get my audit done at the end of the year and the return and the tax, and that's it.
Yeah, I think a lot of the setup, it happens at the start. There is an effort that's needed. So, when we guide clients through this process, there is an element of effort needed from the members to...
They've got to want to do it.
They got to want to do it. They got to realize there is a process of registration. But I think if you have the right person in your corner that has done it over and over and over again, I think that should provide a lot of reassurance that this process will get done and will be done in a seamless manner versus, I suppose, doing it by yourself. There's all these reasons. Yeah.
I like that notion too. There's always the specter of what it could be versus what it is, and it kind of sounds like it's a bit of a hill to climb up at the start, and then it's just a nice coast after that, which I think it certainly has been my experience since I've had mine. And you got to have an audit, and well, yes, you do, but it's not that expensive. People audit, all these fees add up, and I looked at some maths the other day. So if you've got a retail fund or retail super or an industry super, you pay a percentage of the value of that fund in fees each year. Whereas with an SMSF, there might be a couple of lumpy costs at the start. There's the setup, which, by the way, the super pays for anyway.
Yep.
And then there's your annual audit and tax. Now, if your balance is 300 grand, 400 grand, then the cost of an audit is X. But if your balance is $1 million, the audit's probably much the same cost. So the costs seem to be quite fixed, even as your balance moves up. And as a consequence, it gets cheaper and cheaper.
Absolutely.
As opposed to on the other side of the coin, we're paying more and more fees.
Yeah. So it doesn't work as a percentage base in that regard. So, overall for the higher balances, it generally works out much better. Not only that, the efficiency of the SMSF, you being the trustee, you have access to, delegate and invest. So there's so much more benefit in that regard, that flexibility and control that you have versus, your standard super fund. So
it's interesting. I remember last year I did an interview with David Koch, and we specifically were talking about this area, and I was like, the 4 steps. Number 1 is to get control. Number 2 is to work on what your investment asset selection might be. And number 3, once you've got those under control, is to contribute as much as you possibly can. So currently, was it 30,000 a year per person, tax-free contribution?
Concessional contributions, and you can bring forward the last 5 years, and then obviously there's elements of non-concessional contributions as well. So there's plenty of ways, in addition to your standard SG contributions, you can get money into superannuation.
Gotcha. But you want to have control of it and get the investment strategy working, right?
Yeah.
Here's a red herring for a lot of people too. I mean, cheap is dear, as the expression goes on. And I remember, and I've heard almost the sobbing on the rehab you've had to do on a couple of clients. So they've gone, all right, all sounds good. I'm going to go and do a bit of research on this, and look, I can set up a super dead cheap online. Let's just get it done. Why would I want to pay a fee to a pro to do this when I can just do it myself online?
Look, we do get a lot of these clients, and I actually only had this same scenario a matter of weeks ago, which we ended up establishing the SMSF for this particular client. So, it is a cheaper option for sure, but I suppose, in the long run, do you actually know what you actually have to do, or how much does the party will be providing for you? And I think there's an element with the financial advisor. We do provide what's called a statement of advice. So we do factor in your personal information. We do a cash flow analysis. So we factor in everything to make sure this is very suitable and provide recommendation for that.
And again, that's really interesting, because you get people who go, right, I want control. I'm going to take over and do this. So there's the decision, but there's a lot of granular detail that you handle daily, because it's your lane and your team do, that the everyday person, even if they're reasonably financially literate, may be unaware of. So, for example, if you set up an SMSF and it's not a corporate trustee, if you want to then do a property transaction down the line, it's going to be very difficult to be able to facilitate that. Or insurance. It's a horror story there, right? So you do your rollover, set up your SMSF online, nice and cheap, happy days, I've got my money, I'm going to start doing this. And what happens to your life insurance?
Yeah, well, if you haven't thought about that, and there has been that case before that we've been across as well, when I raised that question, those are the things that I think, with expertise, what to look for. An SMSF is not something that you're going to be doing every single day. It's going to be one time that you probably will make this particular action. And I suppose when you do decide that you want to venture down this path, that it is being done correctly the one time, and that's the only time. There's no, if I did this, or, I forgot to do that. And, it just becomes a real headache.
Well, I look to the advice I give my kids, and like my son in particular, who he's 9, he's in this, so he's not setting up a super today. He's just going through that sort of really strong sort of growth phase as your son Chase has done too. And it's like, Jack, if you're going to do something, do it right first time. Take a little bit of time, get it right, and then you don't have to revisit it. Because he's like, run at it, I've got that done. You go, it is almost, but now we've got to go back and do this and that because we did. And so he's actually become really deliberate, and he thinks about what his outcome is, and then what are the steps to make sure it's done properly once, which is always the most time efficient way of doing anything. It's also the cheapest way of doing anything, because to unpack problems down the line can be quite challenging. And at 9, I've got that ingrained into him. Yet we meet clients all the time that come in, I'm going to do it this way, it's cheaper, and then bugger me, I've got to try and unpack all this drama I've created for myself. Can you help? And it's like, well, that's why you should have come in the first place. And it's not to be condescending or holier than thou. It's just that those problems are really quite serious, ATO related or compliance related, or haven't lodged a return, so now you've got a non-compliant fund for years, or whatever it may be, because you wanted to save a few dollars on the front end. And it's just as cheap as dear, for sure. And again, when you're going through to set up an SMSF, it's not you that's paying the fee to do that. It's the super fund that's actually doing it anyway. So you're not out of pocket doing that, right? Yeah,
it comes out of super anyway. So I think those elements, I suppose you only know what you know. I think, if you have someone that has seen the process from start to finish, I think that really does help their situation, perhaps less grey hair than what I have. And, we take that worry out.
Yeah.
You're being guided through the exact process in plain English.
Yeah.
And
I think that reassurance, peace of mind, time efficiency too, because all the heavy lifting, paperwork, all that stuff you guys do. So that's a good place for us to say, so if someone's had to listen to this, they go, okay, that's curious, or I'm interested in this, we'll put a link somewhere around the page here where they can reach out, contact the team, and we can commence that discussion. Obviously, we're fully licensed in terms of what we do in that space, and massively experienced too. And I guess, this is the importance of aligning yourself with people that are experts at what they do, so they can do the heavy lifting. And thanks for sharing your expertise with us as always, but particularly today on the broadcast. And look, hopefully this has shed some light on it for people that are maybe thinking about this, to give them the confidence to take that next step and find out exactly what is involved.
Yeah, absolutely. I'm sure that our details will be there if anyone needs to reach out, and look forward to connecting whoever's interested into that space. So for sure.
Beautiful. Thanks, Madeline, for joining us today.
No problem. Thanks for having me.
There you have it, guys. Make sure you like, comment, subscribe. Most importantly, hit the notification button, and we'll look forward to hosting you next week.